Hey everybody, I'm David Crum, local realtor in the Greenville area. I have a great episode for you today with Cole McCollum, a lender with Go Prime Mortgage. He has some good information to share with you, especially if you're going to purchase a home in this area with a mortgage. And if you are and need help with costs, I highly suggest you pay attention to the part where he talks about his new program to help home buyers. It's $4,500, and I think you want to get a piece of that. Let's get right to it now. Cole, thanks so much for meeting with me today. To get us started, can you tell us a little bit about yourself?
Yeah, so my name's Cole McCollum. I am the branch manager at Go Prime Mortgage. We're based out here in Anderson, South Carolina. I live here with my wife and our daughter, and we have another one on the way coming in October. But awesome. I grew up in Belton, South Carolina. Went to Clemson, graduated there went into wildlife and fisheries biology, and then somehow ended up in mortgages. So I've been doing this for a number of years now, and I love it.
Well, can you tell us, to get us started, what the biggest mistake first-time home buyers make when applying for a mortgage and how they can avoid that?
I would say the biggest mistake is not applying at all. I feel that people have lots of hesitancy with buying a home just because it's a big, scary thing. And what I see happen is like they wait for the timing is right, and then it just never happens. They say best time to buy was 10 years ago, and that's absolutely true. So if you're ready to buy a home and you feel comfortable with the financial obligations that you're going to have to be responsible for, then you should 100% pursue buying a home, regardless of what the interest rate is, regardless of what's on the news.
Can someone with low or limited savings still qualify for a home loan in today's market?
Yes, potentially. So one thing, there's a number of down payment assistance programs out there. There's SC Housing, there's Community Works. There's dozens and dozens of local grants that can be given to you, or down payment assistance programs that your lender may be able to, give you. For example, we're actually starting a grant program, hopefully, next week. It's contingent on, government approval, which should be happening any day now. But it's going to be $4,500 to anyone that fits under the classification of veteran, first responder, or active duty service member. What's
one thing that you wish every home buyer knew before walking into your office?
Before you apply for a mortgage, don't expect like you need to bring too much to the table. It's not as serious as you think it's going to be. Have an idea of what monthly payment you would be comfortable with your mortgage, how much you would like to put down, if anything, and an idea of what your credit score might be.
Can you share with us a success story of a client who overcame a tough financial situation to buy their dream home?
Absolutely. So I had one client who basically had, little to no money in their savings, and they wanted to keep that money in case something were to happen, like the AC unit went out, they had a medical bill, whatever, their emergency fund. So they wanted to buy this house, no cost to them. So what we did is a USDA loan, which is 100% financing, no money down. And then we got the seller to pay for their closing costs, which is about $7,000 or $8,000. So that person came to the closing table owing nothing and was able to walk away with the keys to a house.
How does a pre-approval give buyers an edge in a competitive market, and how fast can it be done?
So it is imperative that you're pre-approved when you're making an offer on the home, and here's why. That seller is not going to take your offer seriously unless a loan officer has looked at your entire financial situation and decided that you have the ability to buy this home. Otherwise, your offer it's not getting accepted.
Can you tell us the difference between fixed rate and adjustable rate mortgages, and which one is better for buyers today?
So a fixed rate means that the interest rate that's given to you at closing, it will stay there for the perpetuity of the loan. So it's not ever going to change. An ARM is an adjustable rate mortgage, which means periodically, based on, it could be different between what kind of ARM you get, the interest rate will change by a set amount. And right now, those do not make much sense in that the lenders know that rates will probably be going down in the next few years. So to them, providing you an ARM loan does not make sense because you're betting on a losing horse. So they price the rates on the ARMs so high that you are forced to get a fixed rate mortgage.
Cole, what's something that people sometimes do that really messes up their loan process and you advise against?
Yeah, I highly advise against keeping cash in a safe or under your mattress. And the reason being is we can't source that. So any money that's being used to purchase a home has to be sourceable funds, and cash does not fit into that category. If I know people are worried about not being able to withdraw money from the bank because of something happening. If that's the case, you got bigger problems than not being able to buy a house or not being able to access that money, like the world's ending or something. It's not good if that happens. Put your money in the bank. It is backed by the government up to $250,000. So if that bank goes under, you're guaranteed at least $250,000 per bank. So you're going to be fine putting 10, 15 grand, $5,000 in the account. So go ahead and do that. It has to be sitting in there for at least 2 months before you buy a house.
Cole, if a buyer is considering purchasing now or waiting, what would be your advice there?
If you're wanting to buy a house now and you can comfortably do so, then you should absolutely buy and not wait. So say, even if rates do come down later, all right, rates are maybe 6 or 7%. Historically speaking, right now, that's pretty average when you look at mortgage rates over the past 50 years. But the thing is people still think that's high. So the buyer market is not as strong as it is. So there's less competition. So you could potentially come into a deal right now, offer a seller, what they're asking for a home, maybe even less, and say, hey, I'll buy this house from you. However, I know that you don't have many buyers looking at it. So what I'm going to do is I'm going to give you what you're asking or a little bit less, and then ask of you $8,000 in seller pay closing costs. So that's an instant $8,000 in savings compared to if you wait till rates are 1% lower, where maybe you're saving $100 a month. Now there's multiple offers on that house. You're having to offer more than what they're asking, and then you have zero chance of getting those closing costs paid by the seller. So you just lost potentially tens of thousands of dollars because you wanted to save $100 a month for a couple of years. And the thing is, you'll probably refinance, crystal ball in front of me, you'll probably refinance in a couple of years.
What are a couple hidden costs of getting a mortgage that buyers often overlook?
Yeah, that's a great question. I wouldn't say they're hidden because they are disclosed, but there are things that you definitely will overlook. The number one, appraisal. So that is part of your closing cost. However, most mortgage companies will make you pay that up front in case the deal falls through. They're not stuck with a bill. So generally I'm seeing those are about $650. So be prepared, first weekend, you're paying $650 for that appraisal. The other thing, I think it comes to a big shock to people, is for homeowners insurance, you pay for the year in front of you. So at closing, you're paying for 12 months of homeowners insurance.
Last question. How do you work with self-employed buyers or people with irregular income to secure a loan?
So that's a great question, and this is really important. The worst advice I've ever heard a loan officer give is that if you're self-employed, you should report more income so that you can qualify for a mortgage. So there are other options out there if you don't fit into a box of a conventional loan. So most of my self-employed people will generally go to what you call a non-QM loan, a non-qualified mortgage. So those are just these outside, basically private money, right? These private investors creating their own loan programs. So the most popular loan product that fits in that category is called a 12-month business bank statement loan. So rather than looking at 2 years of tax returns from your business income, they take 12 months of business bank statements, look at all the income related deposits in those bank statements, average them over a monthly period, and that is your income. And usually it's when we send those bank statements in and do the calculation, it's some absurd number, like the guy's selling Pokemon cards out the back of his van, and they'll say, oh, he's making $12,000 a month, and I'm like, what? I'm like, okay, sure. Now there is a con to that, in that the rate is a little bit higher, because it's not being backed by the government. The mortgage is not being backed by the government or by Fannie Mae or Freddie Mac. So there's some increased risk, and that's reflected in the interest rate. Good rule of thumb is that a non-QM loan will be about 1.5% higher on the interest rate than a conventional loan. But I have a client right now, they were originally looking at like 6.875% on a conventional loan. The bank statements, we had to use those for their income because the tax returns were writing off too much expenses. And we're looking at interest rate like 7.125. So it's really not too bad in a lot of cases.
Awesome. What's the best way somebody could reach out and talk to you today?
Well, best way to reach me is by my cell. I'm pretty a personal guy. I like people to just call my cell phone. It's 864-353-0385. But if you wanted to apply, my application link is goprimewithcole.com.
Thank you so much for watching. I hope you enjoyed this episode with Cole. If you've got any questions for him, you can reach him at the information in the description below. I know you saw his information on the screen earlier. Reach out to him direct. Or if you're trying to buy a home in the Greenville area, give me a call. I would love to help you. You can text me, you can email me as well, whatever you're most comfortable with. And please join our new Facebook group. You'll see that in the description. We'd love to have you there. You can get questions answered about the area. If you've got any questions, feel free to drop them in the comments below as well. And I look forward to seeing you next time.